Hello guys, welcome back. If you find yourself here, there's no turning back. You just entered the first video of the course. This is the first step to your journey of seeing the market in a clear perspective, to my opinion, I guess. Without wasting any time, guys, our first lesson will be on market direction and we'll be focusing on trends. And you need to know that the market runs in three direction. Either market is going up or market is going down. Then there's another part of the wave which we call it a consolidation, where market is moving, no, it's moving in a sideways direction. So for now, let's focus on an uptrend or a downtrend. I mentioned before, saying there are two ways to establish or to identify your trend. This we are going to on this one we are going to focus on H1 and H4, what we want to see. Remember, intraday trading. On an uptrend market, what do you want to see? You want to see market keep pushing up. That's what you want to see. On a downtrend market, what do you want to see? You want to see the market keep pushing down. And I mentioned that you need to at least minimum let it be 30 days, or do not exceed this. If you have a 30 days view on H1 or H4, you are okay with that. You can deal with that and you can establish your trend and you can clearly tell what is happening at that time on the market. So uptrend, what is an uptrend? Uptrend, we establish uptrend, or we identify uptrend by higher highs and higher lows. What is that? The market will push up, but it will fail to break the low that made that impulse. So when it fails, it will push to break above this high, the previous high. So this is the reason why we call this thing a higher high, because this area, it's high at this moment. It's high, and it is higher than this point, and it is also higher than that point. That's why it's higher high. And then it will pull back. As it pulls back, then we have a higher area than this one, but a lower area than this one. That's why we identify an uptrend using higher highs and higher lows. Simple as that. This one, the higher low shouldn't break the previous higher low. Then it should break. For you to identify this or to label this as higher high, you first need to get the break of the previous high. Then you will have your higher low, not higher high, I mean to say. You will have your higher low at this point, as like this, as it moves on. This is how you establish your uptrend. Then for downtrend, is a reverse of what you see here. For downtrend, you take the 30 days, the previous 30 days on H1 or on H4. Then you just look at the price, what is happening there. Then you will see this price, there was a lower price. Then you will see the low price. Actually, this was supposed to be the low. Then you will see this price being the lower than the high here. Then that's the reason why we call it the lower high. It's lower than this area, but it's higher than this one. That's the reason why we have lower highs. So this is what you are going to have, and this is the perfect market. Let's see on real charts how can we identify the trend, guys. Shall we? Okay, guys, welcome back. This is the Dow. This is the Dow, and then we are going to focus on H4 to establish our trend. Remember, that was the perfect market. Market will not be perfect. So what is your takeaway here? Your takeaway is to establish the trend, what is happening from the previous 30 days there. We try to take it from the 22nd of September. Maybe we can take it up to let me remove this. From the 22nd of September, maybe to the 22nd of October. This is the 30-day move. You can see, you can establish your trend like that. But remember, you were looking for sales. And then when you're looking for sales, you will take this, which is the 22nd of August, 22nd October, or either way, you will see that this we have a what? We have a downtrend move. But we are not selling, we are not buying. We are just identifying, guys. We just identifying We are just identifying. Sorry for the for not putting this where it belongs. Okay, guys, what do you have? You can tell that the market is going down. The market is pushing down at this point. That's when we have our downtrend. How do we identify our downtrend? From this point to this point, this is what I like you to see. This point, the price went lower, it went higher. This price did not break above this, but the next one, even here, you can have your lower low here. You can have your lower low here, and then you have your lower high as it breaks right here. The market will not be perfect. Lower low, maybe a little bit of lower high there, lower low, lower high, because it did not break above. The structure is still intact up to that point. So you can see now we have our lower highs and we have our lower lows. That's how you establish your trend. That's all you have to know for now. Go look for this and trust me, guys. This is called a structure. And then if you do not understand what is happening, if you cannot see this, trust me, guys, you will fail to understand what is happening, what is going on here. So please, guys, go look for this. Train your eye to see this. Do not, here's something. You need even this one, but this is an equal low. Even this one, it's a lower high and lower low here. You can still establish that lower low here, lower high. But you need to know how to read the market. That is the key, that is the goal. And this is how we read the market. Then we have the consolidation phase. We have things that are happening here, which we are not going to discuss right now. As you can see, what happened? From here to this point, we have an uptrend. Are we together, guys? So as we have an uptrend, we have a low here. We cannot have a higher high here because this high did not break above. We need to see a clear break. Then it pulled back. Then that's when the price started breaking here. As the price broke this area right here, which we'll call it market shift as time goes, but now you are not ready yet to be talking about that. We have a break, we have a pullback. The pullback did not break below this low. What is this low? This is the low that established the high. This low, it's responsible for this high. Then we have a higher low. This low, it's higher than this, but it's lower than that. That's why we have a higher low. Then this low is responsible for this high. You could have your higher high, higher lows here, higher, but I need to see clear breaks and clear market. I don't need to search for it. So after this, we have a push, then we have a pullback. You see? So the pullback, this low did not came here and break this. So the structure is still intact. So we are on an uptrend. Then we have this high as the market broke above this high. We have a higher high. And then why is this a higher high? Because the low below did not break the low that we identified there. So this low, this low is also responsible for this push high to break above this. That's why we have higher low. And as you can see, you can have your higher low here, but it would break. And you will say you have a market shift, but not, because we did not break this. Then the market kept on moving high. So guys, this is what we have for uptrend and downtrend using H1 or H4 candles. See you on the next video. Thank you.